Thank you for tuning in to this tutorial for the Black Ops Trading Room. As as you all are very well aware of, we have made some new upgrades to the spreadsheet, making it a lot easier to comprehend and understand and follow along. And it's pretty much crystal clear and to the point. You don't have to do any second guessing. But there are some nuances with it, so I figured we would discuss that here in this particular video, and we're also going to go over the user guide that we put in the sheet as well. Okay, so the first thing you're going to notice here is column A and column B. Column A is going to be the ticker symbol column, okay? On the future side, and pretty much everything, I would say the first, all the way down to 115. All right, so rows start, I think, at row 4 to 115. Those are system generated. A lot of the tickers there. So you like on the futures, okay, it may not be directly from the exchange. So you have to keep that in mind. Some of these are, like I said, system generated. But once you get beyond cells 115, those are all tickers directly from the exchange. All right, the next column here is the security name. Okay, so you have the ticker symbol and then the actual security name. Okay, the first 3 columns here with the peach highlight is your E-micro Forex currency futures contracts, and then the ones here in black with the yellow highlight is your actual Forex pairs. Okay, so just keep that in mind. If you're trading Forex, you're going to want to stick here. If you're doing the futures Forex, then you'll use these 3 columns right here. Alright, so that's some of the nuances here in the sheet. Another nuance you'll see is that I highlighted some of these. Alright, let's go over the highlights. The ones highlighted in blue and white are the stock index futures, with the exception of crude oil futures and the US dollar futures. And if you scroll down here further, you will see another exception, which is gold and silver spot futures prices. Okay, so those are highlighted in blue and white. The other highlights you notice is the light blue. The light blue highlight is your futures contracts, okay, your commodity futures contracts, and also your ETF commodity futures counterparts. Okay, so keep that in mind for your light blue. The next highlights you'll notice is the red and the green. They're self-explanatory. Green highlights are your long ETFs, and the red highlights are your inverse sell short ETFs. Okay, and that's pretty much it. So the ones that are highlighted, your first 115 rows here are the ones that I track and watch the most. Yeah, so the first 115 are the ones that I track and watch the most. Okay, so that's why they're there. They're the first 115. All right, the next column, column C, is your resistance, your intraday resistance, and your initial profit target on all long positions. Likewise, column N is your intraday support and your initial profit target on your selling short, your short positions. All right, column D is your pulse wave buy trigger. Column M is your negative pulse wave sell trigger. All right, column E is your positive momentum buy trigger, which, as you know, is referred to as your second long. And column L is your negative momentum sell trigger, as you know, we refer to it as your second short. Column F and column K are your bot checks. Okay, these bot checks pick up positive momentum and possible key reversals and any type of unusual high frequency trading type activity. We also take a look at options activity as far as the put to call ratios and things of that nature, and we look at the depth of the market. Okay, so if there's a 1 here in column F, that is a buy signal. If there is a 1 in column F, you're going to use column E to enter the market. Okay, you only use your column E price trigger when you have a actual buy signal. If there is no buy signal, the only buy trigger that is in play is your pulse wave. All right, jokers are wild. In other words, pulse waves are wild. Pulse waves are always in play, whether there is a buy or sell signal or not. Okay, I'll repeat that one more time. Your pulse wave buy trigger and your pulse wave sell trigger are always in play, regardless of a buy or sell signal. Okay? Doesn't matter if there's a buy or sell signal or not, these price triggers are always in play. Alright? We always play the pulse waves. That is the meat and potatoes, bread and butter of the system. Alright, so column F is a buy signal. Column K is a sell signal, or what we refer to as negative bot checks. System algorithms sniff out buying and selling pressure, and when we pick up selling activity, even if the market's rallying, it will pick that up. And when you get those, you'll want to pay attention to them. All right, now here's some of the nuances of the sheet. Column H and I. Okay. Column H is your bull market uptrend indicator. Column I is your bear market downtrend indicator. If there is a 0 in column H followed by a 0 in column I, it means that that particular market or security is now trading within the Kumo cloud of death. Okay, it's in the Kumo cloud. That means it's consolidated price action. Okay, and columns H and I, as I said, is your uptrend and downtrend. If there's a 0 in both of these columns here, that means that you're in a Kumo cloud. Okay. Normally, traditionally, if you want to take a ultra conservative approach, you will not play signals in the Kumo cloud. You'll wait for the market to choose a direction and break out, and then you'll take those signals. Me personally, I will take signals in the Kumo cloud. Okay, just because I program the system and I know how it works and I understand the signals, so I'm comfortable taking those trades. But you may not be, so you may want to kind of paper trade those situations until you get comfortable and familiar with the system. Okay, columns G and columns J are your initial and trailing stop and reverse. Okay. Now, one word of caution here. One of the ways I use my stops is I won't necessarily move the stop each day. I may use my initial stop price and hold that, and just use that, because usually that is going to be based off of market volatility, and it will usually mean a key support level on my long positions or a key resistance level on my short positions. Okay. Another thing that you're going to notice also is that when a market is in overbought condition or oversold condition, you will get both buy and sell signals. Okay, so you're going to want to take both of those trades and put both of those tickets in. If you're going to do that, obviously your stop prices here may overlap your entry prices here. So the way to do that would be this. Take, for example, let's just use Apple Computer. On Apple Computer, you have both a long and a short. Okay, what I would do is I would use these two entry prices to cancel each other out. Use those as your initial stop. So I would go long here and use this as my stop price. Also put a ticket in the short here and use this as my stop price. All right. When you have both buy and sell signals, that way you don't have to worry about creating a mess for yourself. All right. So if there was only a buy signal on Apple, obviously I would use this initial stop price as my stop. That's how I would do that. Likewise, if there was only a sell on Apple, I would use this here as my stop price. All right. One other thing you're going to notice too is that the system picks up key reversals also. So if you're in a downtrend market, okay, which means you have a 1 here, and you have, let's say, a 0 under the sell column, but you have a 1 here in the buy column, what it means is the market's picking up now, that the market's trying to reverse from an oversold condition. So you're trading in a counter trend position at that point. And it's all pretty much self-explanatory. But basically, when you get your sheet, all you're doing is looking for buy and sell signals. And you want to get in the habit of just, following maybe 2 or 3 securities. That way you can become familiar with the price patterns and movement, and it's easier for you to put your tickets in because you always have tickets working. You're always going to be playing these pulse waves here on your favorite securities, regardless of if you have buy or sell signals or not. You're always going to play these because you never know what's going to happen in the market. So that way you're always in a position to profit regardless of what happens in the market. All right. And one final note here is in the user guide. Just remember what I wrote here. Okay. These 2 notes that I have posted here in the sheet are very important. You're going to want to read that. And also here in column A, it breaks down every part of the above, every section here. It tells you exactly what it is and gives you hints on how to use it. Basically everything I just told you. This user guide goes over it. And below here at the bottom of it is your additional questions and answers, or your fact page, okay, with a lot of questions that we got from the Black Ops trading room, and then I answer those questions here, some of the most common questions. Okay, so pretty much everything you need is right here in the sheet when you get it. All right, so be encouraged, and just remember, take what you can, give nothing back, and I'll see you in the trading room.